Good morning, everyone. Welcome to another edition of Daily Trader. I'm Kevin Hincks. I'll be taking you through the next 10 minutes. We're going to look at the economic data that came out today in terms of the CPI data and why it's not as good as the market's initial reaction to. And then we'll look at two hot names in the news today. Supermicro, that's down again today on some news, and Rivian, that's up big today on some news. So let's get right to them first. Our macro minute. The CPI data comes out today. The headline month over month up 0.2. The headline year over year up 2.6%. That is up 0.2 from a month ago. The core up 0.3%, or actually up 0.28% if you want to be more exact. And the core year over year inflation 3.3%. That is unchanged from a month ago. So the year over year numbers, headline up 0.2 to 2.6%. The core year over year 3.3% unchanged. Here's some of the details. The 3-month annualized rate of inflation moved from 3.1% to 3.6%. The 6-month unchanged at 3.3%. Some of the highlights: energy was down across the board, right? Energy in commodities, gasoline, and fuel oil, all on the downside. But the problem is almost everything else was higher. Apparel was down 1.5%, but just about everything else was higher on month over month. Energy services, food, away from home and or at home and away from home, and new vehicles unchanged, used cars and trucks up 2.7%. Energy services was up 1%, electricity up 1.2%, utilities, gas, services, rent, everything was pretty much higher. So the relief reaction that we got from the initial release, because it came in line, these were all, the numbers I gave you were as expected. But the market's figuring out inflation's not going down, and eventually the Fed is going to have to comment on this with the 10-year yield now up to 4.4%. Remember, here's the interesting. It dipped on the number. They rallied bonds and it dipped on the number, but it's right back to where it was. And even though the bonds are something you should be watching right now because they are getting oversold on the downside. Yields high, notes, 10-year notes down. So watch for that. But 4.4%, a pretty interesting level for the 10-year yield. Now, let's get to our two names today. The first one, Supermicro. Supermicro had more news today after the company announced it was unable to file their quarterly report for the period ending September 30th in a timely manner. Another day, another bit of bad news for Supermicro. Now, depending on what you read, this is a temporary problem or this is a systemic problem that could, hurt this company. As you know, if you look at a chart of Supermicro, it has come down from $122. It plateaued right around $90 a few months ago in July and August, and now is trading just under $21 a share. That is incredible, the sell-off in this company. And the question is it systemic? Is this a company going out of business and fudging their numbers? Or is this a buying opportunity? Remember, Warren Buffett said it best. Be greedy when the world is fearful and be fearful when the world is greedy. We have to figure out which it is with Supermicro. But for our purposes, we can put on a trade that does well in either direction, right? It's called the back ratio. So what we looked at here for a back ratio spread is this. We went to the December 6th, because with this, remember, if you want movement in an options position, you want duration. If you don't want movement, as short as possible. It's just that simple, right? So what we did in Supermicro was we went to the December 6th expiration. So relatively short period of time, 23 days till expiration, but enough duration, 3 full weeks, right? So what I looked at here in terms of a practice trade was selling the 17 call one time and buying the 24 call 2 times. And we did that for about $1.60 credit, right? You sold one big in the money call, bought 2 out of the money calls. Now, you can tighten this up a little bit. You can move the strikes around. You can play with it a little more. But what this does, if the stock goes to $18.60, Below that, you're profitable on the downside. Where it gets interesting is on the upside, because you are long an extra call unit on the upside, which gives you unlimited upside potential if something were to change in Supermicro. So this is a spread that sells a vertical call spread, uses that credit to buy an extra call, still doing it for a 160 credit, but it gives you, if you look at the profit chart there, an upside exposure. Now the risk is that it stays right in between. You see where that profit graph dips down there. That's if it goes right to the $24 strike, right? That's where the 17 call would be its max value and the 24 call would be 0. So that's where that peaks. Anything else, if it breaks through, the high 20s and goes back into the 30s, remember, it wasn't very long ago this stock was in the 40s. Just a few weeks ago, October 29th, the stock was trading 48. If you get a move like that, some type of recovery or their problems being solved, this could be an explosive trade, an explosive way to trade Supermicro. So it's playing for a big move. You can actually do it on the put side too, a 1x2. This one is the call side. It is what you make on the downside is the credit received. If it breaks $17 and upside, you have one extra call unit for that unlimited upside move. The risk on this trade, anything that sits right around $24. All right, let's get to our next one here. And that's got news out today, and that is Rivian. Now, Rivian, it sounds like, or it appears, this stock currently, right now, as we're talking here, is up 17% on the day. And this is a stock that right after the earnings broke $10, and now it's trading $12.40. Why? Volkswagen. Volkswagen putting more money, introducing a joint venture up to $5.8 billion. What is that important for? That gets Rivian cash and through all these times and gets them to production. The other operative word here, scale. Well, here's what Volkswagen did. They created a joint venture with Rivian and Volkswagen, now up to $5.8 billion. They added another $800 million. It's going to be called Rivian and Volkswagen Group Technology. Here's what it does. It creates a software and electronics architecture and scale EV platforms, which means, think about that, scale. That means everything about Rivian, they have the cash now to get bigger. Volkswagen's basically employing the Rivian technology, giving them the cash and scaling their entire organization. They're going to launch the R2. That's their next car in the first half of 2026, and then the first Volkswagen car to come out under this joint venture will be in 2027. So what this does, the question with a company like this, like Tesla, like Rivian, like all these is it going to a company that's going to make it through this, or is it going to be a DeLorean that eventually runs out of cash like a lot of these companies do, and a great idea just didn't have the cash and the scale to become profitable, and that's what Rivian is doing. So the practice trade that we looked at for Rivian is something that it's a little more bullish, right? Just adding on because the news flow in Rivian is really positive. What I did, I went to the November 29th expiration, bought the 12 call, went to the November 22nd and sold the 13 call. So you're doing the 12, 13 call diagonal, only costing you 50 cents. Anything going up towards that 13 strike is where you want this to go, but also you've got a chance to roll this from a diagonal into a vertical spread eventually. So this is the one, like I said, we're buying the Nov 29th and we're selling the Nov 22nd 13 call. Gives you a little bit of theta, daily theta, and it's a bullish play in Rivian going forward. So that, like I said, you're spending about 50 cents. It can max out right at that $13 mark at the end at the November 22nd expiration. So it gives you about 21 deltas, and it's very, it's relatively small debit. And like I said, you can extend duration on this trade into the November 29th. It's not a big trade. It's not big and sexy, but a lot of the numbers in Rivian are very small. So you got to figure out small ways to chisel away at profits and Rivian. Now, you could just buy the stock and do a covered call strategy, but you've got risk. This is trading with much less risk, where smaller accounts can do some, and medium and larger accounts can do more of the same because you're using less capital. All right, that's our show for today, everyone. Remember, we got a back ratio in Supermicro playing for a big move in either direction. Another way to play for a larger move. You could also do the long iron condor there, and a diagonal spread in Rivian playing for a move between $12 and $13. All right, that's our show for today. I'm Kevin Hincks. Have a great day, everybody. We'll see you tomorrow with another edition of Daily Trader.